Hey guys, we're doing a update here on Valeant Pharmaceutical. Before I do that, I just want to let you guys know the purpose of this channel. We're recording this on August 30th, by the way. The purpose of this channel is to highlight really good trade ideas with really good risk-reward ratios. And that's it. Okay, so let's jump right into it. If you know anything about the ticker symbol VRX of Valeant Pharmaceutical, is that people loved this security at one point. I mean, right here you're looking at around last year in August it hit the high of $263 dollars, and it had a market cap of around 90 billion. Okay, that's ridiculous. Right now it's selling at 30.25. Hit the low of 18 something in July, and it's amazing how people fall in love with something and then they fall out of love with something. Just looking at the precipitous fall of this thing right here. So this drug company, their basic strategy was to go out and buy smaller drug companies, and whatever drug portfolios that those companies that they bought, they would just jack up the prices of those drugs. That was their business strategy. Go out, buy other drug companies, and then jack up the prices of the drugs that they bought. And how did they fund this acquisition spree? They pretty much did it with debt. Okay, looking at their balance sheet right here for 2014 and 2015. In 2014, their debt on their balance sheet was 15.2 billion. A year later, it's at 30.2 billion. Okay. They more than doubled it in just 1 year. And their business strategy was to jack the prices of the drugs. I mean, it doesn't take a rocket scientist to understand that eventually you're gonna run into trouble if you keep doing that. If you don't have any other competitive edge or competitive moat, you're eventually gonna run into trouble. So my basic premise here is that people become overly optimistic, and that's what they did when they priced this company at 90 billion up here. And then people fall out of love with that and become overly pessimistic. Okay. On the weekly chart, we can see the RSI. The price made a new low, but the RSI did not. Okay, that's a really good technical indicator. So what we're looking for here is a really good risk to reward ratio to place our order. And here's where I think high probability is for a really good entry point. So basically, this right here is a gap up right here. It goes the price gapped up from there, and the price generally tends to come back and fill the gaps. Okay. Probability is it's gonna come back and fill this gap. It doesn't always happen, but a lot of the time it does. And there are other things in this same region. For example, you got the 21 EMA, you got this Fibonacci line, and you have this 2725 line, which I've highlighted. That 2725 line is actually the indication for the 8 EMA on the weekly chart. And we're gonna be looking to buy this in this region right here. Okay, this 28-27 dollar region. It all depends on how it behaves on the hourly chart. That's what's gonna tell us when to buy it. Okay, that hourly chart strategy, that's like a whole another video, but you get the general gist that it's this area that we're gonna be placing a trade in. Our stop loss is going to be around 2%. So let's say if we bought it at 27.25, our stop loss is going to be at 26.71, and 2%, so we'll lose about like 54 cents. And our price target will be this red line right here, which is around 38.60, 37.60, and 38.25 region. And then I'll make another video update if it hits this price, if anything else changes. Otherwise you just take a profit here. And yeah, so we'll lose around 54 cents, and we will make around $10. That's our risk to reward ratio right here. Subscribe to my channel. This is my first video. There's a lot coming up. If you don't want to subscribe, just follow my Facebook and or Twitter channel. That way it's more convenient for you guys to follow for new video updates. And yeah, and that's about it. Thank you.